Assalamu alaikum wa rahmatullahi wa barakatuh. Alhamdulillah, alhamdulillahi wa kafa wa salamun ala ibadihi alladhina astafa. Amma ba'd. I hope that all our participants can hear me. If anyone is unable to hear, please notify us through the chat. We have done our level best to make sure we can start on time by also making sure that our voice transmission is clear. If any one of the participants can kindly indicate whether voice is clear, and if so, we can proceed. Barakallah. Jazakallah. Bismillahir Rahmanir Rahim. Alhamdulillah. Alhamdulillahi wa kafa wa salamun ala ibadihi alladhina astafa. Amma ba'd. Rabbi shrah li sadri wa yassir li amri wa hlul 'uqdatan min lisani yafqahu qawli. Subhanaka la ilma lana illa ma 'allamtana innaka antal alimul hakim. قال الله تعالى في كتابه المبين والعصر إن الإنسان لفي خسر إلا الذين آمنوا وعملوا الصالحات وتواصوا بالحق وتواصوا بالصبر صدق الله العظيم. Respected participants, first of all, on behalf of the Jamiatul Ulama South Africa, I would like to welcome one and all to this important webinar on the common questions that are asked by Muslim sisters. These questions are based on the wealth of information that's been gathered over time through the phone calls and email messages that are received on a regular basis for offices. So this is indeed a great benefit and a privilege that many individuals enjoy in this country, where matters of our personal lives can be presented anonymously, and a response or basic Sharia guidance can be obtained for us to gain some direction in our personal affairs, and that includes the important aspect of Zakaah. I truly do appreciate your participation, and I look forward to being of benefit to one and all by responding to these important frequently asked questions regarding Zakaah. Just before we commence with the actual presentation, I just want to make it clear that there will be time allocated towards the end of the webinar, the last 10 minutes, inshallah, for Q&A. If we run against time, we might just pause some of the questions that are outstanding and go ahead with those questions. If anyone is uncomfortable presenting their questions on this forum, they are welcome to send an email, and I will present the email address. I'll put it up on the screen for our participants to take note, inshallah. Commencing with the presentation itself, as it states, we ideally appreciate these questions that come forth, and it does provide an ideal opportunity for us to be looking into these aspects in greater detail from our classical books, and to present responses to the public. This is your slide for the contact details of our office. You can, if you are comfortable using the telephone number, that is the number to use. Alternately, and I would recommend that the email address rather be used for purposes of preserving your personal identity. The email address is ifta@jamiatsa.org. Commencing with the first question. We are not going into too much of detail in terms of the economic benefits and the virtues and warnings pertaining to Zakaah itself. We are proceeding with the very first question that we receive, very common, very frequently rather. The first question is, where do I even start calculating Zakaah? And I think this question stems from, in some cases, having discontinued elementary Islamic education prematurely. Some individuals may not have been exposed to census, and individual Zakaah matters were handled by an elder of the family or maybe a husband, and now that the individual is deciding to embark on this process on their own, they are not sure where to start with the actual zakah calculation. So in terms of the start, where do we start? I would prefer to just simplify it by providing the zakah equation itself, because once we understand and comprehend the zakah equation itself, it becomes more easier to approach the calculation of our own zakah. This is as easy as it gets. On the one hand, you have your zakatable assets, which are particular assets recognized by the Sharia, and then you have deductible liabilities, which qualify as deductions. Remember, I haven't placed here liabilities because not all liabilities, not the full quantum or value of liabilities can be deducted. It's only a specific quantity of liabilities that can be deducted. And that is why we call them deductible liabilities. Once this basic subtraction of deductible liabilities is made from assets, we arrive at our netable wealth. Obviously, if this amount is exceeding the nisab rate, then a zakah of 2.5% becomes payable. If the result of that deduction is an amount of wealth which is below the nisab, the nisab rate, then no zakah is payable by the individual in that particular year. So this is as simple as it gets. In the next few slides, what I can try to do is provide a basic overview of the zakatable assets, the non-zakatable assets, and the deductible liabilities, inshallah. So on the zakatable asset side, the first item you'll have there is cash. Cash in any form would need to be subjected to zakah. So whether it be cash at home or cash in a bank account, it would need to be subjected to zakah. Then you have receivables. Anyone who owes you money, or if you are in a business and you receive, you supplied some customer or some merchandise and are awaiting repayment for that merchandise, that receivable qualifies as a zakatable asset. It's a cash equivalent, so to say. Then gold and silver, from a Hanafi fiqh perspective, gold and silver in any form needs to be subjected to zakah, irrespective of whether the gold or silver is in use or not in use. Then we have stock in trade. If an individual is involved in some kind of commercial endeavor, stock in trade would need to be subjected to zakah. There is more detail on this in coming slides or responses to coming questions. Then any investments in zakatable assets. So if you have investments in gold, maybe it will be zakatable. An investment in maybe livestock. So ordinarily livestock is zakatable, as I mentioned in a short while. But if an investment is in zakatable, is in livestock, then a different rule applies, in the sense that we apply the rule of an investment rather than the zakah rules surrounding to livestock itself, because the rules surrounding livestock and zakah is very specific and within a very specific context. So the next item we have is your agricultural produce, which applies very seldom to individuals who participate in these events. And this is why we've placed an asterisk there for anyone who requires information on these particular aspects, whether it's livestock or zakah on agricultural produce. They are welcome to contact us, and we will try to assist them as best as we can. This is in a nutshell your zakatable assets on that extreme left side of the zakah equation. The non-zakatable assets, the first one we have is our precious items that are not intended for resale. So you may have some valuable stones or some maybe say a stamp collection or paintings maybe, or vases for that. These are precious items. They have tremendous value, but if they are not intended for resale, they would not have to be subjected to zakah. Similarly, if you have money which is out of circulation, it doesn't have buying power. A stamp collection, as I mentioned, an art collection, as I mentioned, would not have to be subjected to zakah. So personal residence does not have to be subjected to zakah. Similarly, any other immovable property, maybe a holiday home or an extra vehicle, will not be subject to zakah. Same goes for furniture. fixtures and fittings in a business context would not have to be subjected to zakah. Same with your kitchen appliances and all of those valuable items, your electrical appliances in a home would not have to be subjected to zakah. Those do not qualify as valid zakatable assets. Impermissible wealth, it goes without saying that impermissible wealth should not be in one's possession, but if it is in a person's possession, it would not have to be subjected to zakah. Then any gold, non-gold or non-silver jewelry would be exempt from zakah, and goes for, usually you would determine anything as gold if more than 50% of the gold piece is gold. So if it's anything less than usually the 100% is 4 carat, anything less than 12 would be regarded as non-gold or non-silver jewelry. Collateral, if you maybe say example in a situation where you're renting property or you're renting a business premises and you've given collateral to a landlord, the collateral amount itself would not have to be subjected to zakah. As an individual, you need to have both the condition of possession and ownership over the asset. In this particular scenario, the sum of collateral is only your possession, it's only your ownership. It belongs to you as an individual, but you do not possess it. Hence, it would not have to be subjected to zakah. So this in a nutshell is your non-zakatable assets. In terms of your current liabilities, any short-term expenses for the current month, like rent, your telephone bill, whether it's your fixed line or your mobile telephone, the telephone bill amount can be deducted for the current month. Your school fees, madrasa fees, if you are the individual who is bearing these expenses, then these qualify as valid deductions from your zakatable assets. 12 months installments of a long-term liability, so you're paying off a loan maybe with a financial institution, only 12 months of installments of the coming year can be deducted from your zakatable assets. Remember here I mentioned current liabilities. The implications of the word current is the very same like in accounting parlance, and hence it's only 12 months that is where the liability quantity is kept, and only that amount can be deducted. Any other debts which are payable in full within 12 months, say you've got a casual loan going with some family member or relative or friend, in that case, if the amount is payable in full in the next 12 months, that can be deducted as a liability from your zakatable assets. Any unpaid zakah of past years also qualifies as a liability, as that amount would have ordinarily been out of your wealth and would not have to be subjected to zakah. So your unpaid zakah of past years, as soon as it's calculated, can be deducted from your current asset base. Any personal or casual loans, I already referred to this, can be deducted from liabilities, from your assets, sorry. Any accounts in arrears, say you're owing maybe a landlord or any telephone bill, maybe the city of Johannesburg or whichever other city you reside in, if there's any arrears, the full amount can be deducted from current assets or current cash on hand. Then accrued expenses, an example of this would be the example currently, where you're due, but you are yet to be paid. In this scenario, the accrued expenses can be deducted from your current assets. That's very much our response to question number 1, where do I start? Then we have this aspect of what if I do not have a zakatable asset for one full Islamic year? This is an area of common misconception, and it's a very frequently asked question. So from a Sharia perspective, we should bear in mind that the Sharia is not geared towards stifling our lives. The Sharia rules are not in place to make things more difficult for us. Rather, it is geared towards refining our lives and improving our lives. In the very same way, when it comes to zakah, the Sharia rule of zakah, or having an asset in one's possession for a full Islamic year, does not necessarily mean, as we worded it here, using the word full, that you have to have every 5 rand coin must be recorded when did it come in your possession and how long is it in your possession. This is not necessarily the correct understanding of the 1-year rule. What I'll do is firstly state the rule in brief to respond to this question, and then go through a few slides to illustrate the point more clearly. So the rule is an individual needs to look at the beginning of their zakah year and the end of their zakah year. If at both points the individual is in possession of wealth, zakatable wealth exceeding the nisab rate after deducting liabilities, then zakah is due on all their wealth, irrespective of the fluctuation in their wealth during the year. The only scenario where this will not apply is where during the year, the individual had a complete zero balance in their wealth. And as a result, their year, so to say, broke, and now a new year will commence when the individual is once again in possession of surplus zakatable wealth exceeding the nisab rate. To illustrate the point more clearly, we have these graphs. Here's a scenario where an individual commences the year with the 1st of Shaban 1441 and the end of the year is 1st of Shaban 1442. And in this scenario, the individual's wealth in the beginning of the year is exceeding the nisab rate, as well as the end of the year is exceeding the nisab rate. In this particular scenario, zakah will be due on all their wealth, even though some forms of wealth are only in possession for less than 12 months. If you look at the second last bar, the third last, the fourth last, all of these in the middle, this wealth has not been possessed for a full year. But despite having not been in their possession for a full year, zakah will be payable on the total amount of wealth in their possession. What this also goes to show is that zakah is not necessarily due in Ramadan. It is due 1 year after being in possession of surplus zakatable wealth exceeding the nisab rate. As you see from this example, I purposely used the date of Shaban as the starting of the commencement of someone's year and the end of the year being other than the date of Ramadan. In this case, zakah is payable. Here's a scenario where an individual commences their year with wealth exceeding the nisab rate. They end the year with wealth exceeding the nisab rate after deducting liabilities. But during the year, there's such a fluctuation that it even goes below the nisab rate. But we still don't have a zero balance. In this scenario as well, zakah will be payable on the total amount of wealth in possession or on hand after deducting liabilities. In the third scenario, we have an individual who has a designated year of a 1st of Shaban 1441 and 1st of Shaban 1442. In this scenario, the individual commenced the year with wealth below the nisab rate and ended the year with wealth exceeding the nisab rate. Because they haven't met the requirement of having surplus wealth at both points, in this scenario, zakah will not be due in this specific year of zakah. And this is purely because of the requirement of having the zakah, not having surplus zakatable wealth after deducting liabilities. Here, I just like to apologize. I needed to make a fix on this particular bubble that has appeared on the screen. There's an error here saying that zakah is payable. Zakah is not payable in this particular scenario for this particular year of the individual. Then you have a scenario where an individual had wealth. It does not exceed the nisab rate throughout the year. In this particular scenario, even though the individual has a designated date of zakah, zakah will not be payable. In the last scenario, we have an individual who has wealth exceeding the nisab rate in the beginning of the year. They have wealth exceeding the nisab rate in the end of the year. But during the year, there was a zero balance at the 1st of Safar 1442. And as a result, this individual's year will now break, so to say. And it will only recommence on the 1st of Rabiul Thani 1442. As you see at this juncture, the year will commence. And 1 year later, this individual will assess their zakah position and either pay or not pay zakah. But in essence, the year of this individual has shifted from the 1st of Shaban, and it's now going to be from now on the 1st of Rabiul Thani 1442. This will now be the new zakat date of this particular individual. Then question number 3 we receive very often is, how do I go about calculating zakah on my gold or silver jewelry? First of all, gold in any form is zakatable from a Hanafi fiqh point of view. Then, as far as jewelry is concerned, we first need to determine, is it gold or not gold? It will be regarded as gold if it's 12 carats and above. So if you get 12 carat, as far as we know, we're only getting 14 carat upwards. So anything 14 carat upwards would have to be subjected to zakah. So we first have to determine whether it is gold in the first place. Then we have to determine what's the carat value, what's the rand value per 2224. Each have a different value, and that value fluctuates on a day-to-day basis. It's calculated by our office on a day-to-day basis when we receive values from the rand refinery. Then you also need to know how many grams of that particular carat do you have. So people often ask us how many carats and how many grams I have. The response is simple in the sense that all you have to do is get it once to a jeweler. And then one time is sufficient. At that one moment, you just jot down how much of which carat you have, or which carat is the particular piece of jewelry you have on hand, and how many grams are there. You keep it on a piece of paper, store it with the jewelry piece, so that the same figures of carat and grams can be utilized for future reference in coming years. Here's an example. We have an individual who has 22 karat gold, and the current value is, say, approximately 584.52 rands, and they've got 30 grams of 22 karat. So all we're doing is we're taking the rand value of 22 karat, multiplying it by 30, and we arrive at a conclusion of 17,535 rand 60. This, I acknowledge and I concede that is not the value you're going to get when you sell your jewelry to a jeweler, but it is a rough estimate of what the value is, what the jewelry piece is worth. And this is the best figure we can go by. Otherwise, we'd have to transport the jewelry each year to a jeweler to determine how much can they give us for the jewelry. Once we have the market value of the jewelry on hand, now we can multiply by 2.5% and we arrive at a conclusion of 438 rand 39 cents payable as zakah. I had one scenario where a person didn't calculate this, and when they arrived at the 17,500 rand, this is the amount they were contemplating giving zakah, and they didn't have enough cash. So please do not forget to multiply then by 2.5% to get the amount of zakah that is payable. The same applies for silver. Once you have the rand value of the silver, multiply it by the number of grams you have on hand, you'll get the average market value, multiply that by 2.5%, and you get a result of how much zakah is due. Zakah is also due on gold coins in terms of their current market value. Then another common question we receive is, what if I don't have cash to pay zakah due to being unemployed? In this scenario, zakah, it's important to keep in mind for those participants who are familiar with accounting, that zakah is based on a balance sheet concept, not an income statement concept. It doesn't matter whether there is income or not. It's based on whether you have assets in terms of the eyes of the Sharia. If you have assets after deducting particular liabilities and that figure is exceeding the nisab rate, zakah will still be payable. So in this scenario, let's assume a person has done the assessment. They've quantified their assets, they've quantified their deductible liabilities, and they've made the deduction of liabilities from assets. They arrived at a conclusion which means that they have to be paying zakah of 2.5%. Zakah is still going to be payable in this scenario. It doesn't mean that the individual is not employed, so they are exempt from paying zakah. There are a few options. Number one is, one option would be to actually dispose of an actual zakatable asset. So you have a zakatable asset worth what is payable. So assuming 5,000 rand is payable, and you have a piece of jewelry which is zakatable ordinarily, and it is worth 5,000 rand, that is that actual item can be given away to the poor without an intention, or with the intention of zakah. Option two is to dispose of any other item worth the zakat which is payable. So we have zakat payable worth 5,000 rand, and we've been able to put together some unused clothing and unused shoes, or maybe a handbag. It's worth the amount of zakat that is payable. We can give away that particular item in kind as zakah. Option number three is the zakah is not paid immediately, but we keep a record of unpaid zakah in our Islamic world, and this is then fulfilled on our demise from 1/3 of our wealth after having settled burial expenses and after having settled all our debts. The 1/3, then what is remaining, 1/3 of that will be used for our outstanding Islamic obligations, whether it is Salah, Zakah, or even our Hajj. Another common question we receive is, do I pay Zakah on money given to run the household? Very common question. There are two possible scenarios here. When money is given by the breadwinner to run a household, either it is given as alimony to the wife herself for her to utilize since she's not working, it's her own money. In this scenario, the zakah that is given to the wife and she's not accountable for that way or how she spends that money needs to be subjected to zakah for purposes of the wife herself. But for purposes of money given to run the household, this is now a very different scenario. For this purpose, we need to firstly understand the rule of zakah in terms of which assets are zakatable and which ones are not. We need to pay zakah on any asset if it meets both the criteria of ownership and the criteria of possession simultaneously. So in this scenario of money being given to the wife to run the household or to purchase groceries as and when are necessary, in this scenario, the funds are in possession of the wife maybe, but they're not necessarily in the ownership of the wife, because if husband requires the funds and there's some emergency, unforeseen circumstances, he'll ask her for the money and she'll have to give it back, or she'll have to account for where and how was the money spent. So this is an indication that the zakah is not belonging to the wife. That is why such money is given to the wife to run the household would not be zakatable. As I mentioned earlier on, money given to the wife herself is belonging to her and would need to be subjected to zakah for purposes of her zakat, not in terms of the aspect of money given to run the household. Then, how do I calculate zakah on my business? Many women are involved in commercial activity. And from a Sharia standpoint, the Sharia doesn't frown upon a person being economically active. What the Sharia does have an issue with is whether the Sharia rules are violated when being economically active. So it's important to keep in mind this particular principle, and our Sharia is concerned, and as well as the zakah aspect of our commercial activity is concerned. What I'll do here is just maybe provide a brief slide to respond to this question. And then there are, I think, about 5 or 6 slides that follow on with more detailed responses on this particular question. But in the interest of time, I'll just go through the one slide to briefly respond to the question, and then move on to the other questions that we have commonly asked by our Muslim sisters. And if there's a question regarding zakah itself on a business, and then we'll come back to this particular aspect of things. So the question again, do we have to pay zakah on a business, and how do we go about it? It all depends on the type of business. So if it is a service-based business, like maybe say you have a female who is a legal practitioner, or maybe a medical doctor, or maybe say running an accounting practice for that matter. If it is purely service-based, then the main categories of zakah items would be cash on hand, your bank deposits. That cash on hand refers to petty cash as well as any other cash stored within the business or at home. Bank deposits, your petty cash would be zakatable, and your debtors, because these are now trade debtors. Remember, you've provided services, maybe dental services, medical services, accounting services. These are individuals who owe you money, and it's a cash equivalent. It would need to be subjected to zakah. Then you have the common scenario where Muslims are involved in your drop shipping, where they take on particular samples of goods, they advertise it on their profiles and their different social media platforms, and then as and when customers request the particular item or express interest in it, they source it from their supplier and then supply or fulfill on the particular order. So in this scenario, there will be zakah on cash on hand. Obviously, whatever has been sold and cash is on hand currently, that would need to be subjected to zakah. Same goes for bank deposits. If some money has been made in the process of drop shipping, e-commerce, then they would have to, if those funds have been deposited in a bank account, that would have to be subjected to zakah. Petty cash on hand would also have to be subjected to zakah. If anyone is owing money for goods supplied, the debtors will also have to be considered. Then you have a Muslim running a retail enterprise, say selling something from home maybe. or selling ready-made wares to the public. In this scenario, the stock that is on hand, primarily for resale, would need to be subjected to zakah. As you noticed, I have not put stock in the dropshipping example because in that scenario, the dropshipping agent doesn't really hold the stock. They only have a sample. They show it to interested parties and then decide from there on, but they don't hold any stock. So their zakah falls out, but in this scenario of retail or enterprise, there would be stock on hand. Cash on hand would need to be subjected to zakah. Petty cash on hand would need to be subjected to zakah. Debtors, if anyone is owing for goods supplied, they would need to be included in the zakah calculation. In a retail enterprise, you would have something like packaging material. The packaging material would also need to be subjected to zakah because those are line items that you make profit on most of the time, and they have some value. Hence, the packaging material would need to be subjected to zakah. Raw material, we have a bit of detail here. If, let's say, example, it's a home industry, and the raw material is such that it is just part and parcel of the final product, and it's not visible. It's not visible to the naked eye. In that scenario, that type of raw material would be exempt from zakah. But if you have raw material that is visible through the naked eye in the finished product, then it would that stock would have to be subjected to zakah. There's another important point. Some fuqaha have mentioned that if the raw material is such that it's like make or break in the final product, then that raw material would also need to be subjected to zakah. So if I use examples, salt as the first example is make or break, and hence would need to be subjected to zakah. Maybe you've got choc chips for baking choc chip cookies for in your something that is invisible, like maybe a flour, would not have to be subjected to zakah, even though it's make or break, but would not have to be subjected to zakah. Here are the few slides that I'm just going to go through just in the interest of time so that we get to the other slides and questions that are frequently asked. So this is more detail on your stock in trade. This is some detail regarding the non-zakatable aspects of stock in trade. Then you have cash, some details in terms of cash. This will apply whether an individual has a business or no business, but we'll come back to it if it's necessary or applicable to anyone. Receivables also applicable in the commercial context. Deductible liabilities also applicable in the business context most of the time. Question number 7. What if my jewelry was misplaced for many years? This does happen. We recently had a scenario where a person stored the jewelry in a travel bag, and for obvious reasons, so that it wasn't apparent to anyone frequenting the house, and they traveled with the bag to different countries, forgot where it was placed, and years later, when they were washing the bag, realized that as they opened the bag, they realized the jewelry fell onto the floor. So this does happen, and hence the response to this particular question. As far as zakah on misplaced jewelry is concerned, it comes back to the overarching rule of ownership and possession. From a Sharia perspective, this is the first rule you need to understand in terms of this particular question. The possession and ownership over an asset is crucial before subjecting an asset to zakah. In this particular scenario of misplaced jewelry, where the individual does not know where the jewelry is, they possibly cannot recall where the jewelry is placed. No matter how hard they try to look and find it, they just cannot find it. In this scenario, zakah would not be due on that particular jewelry on the basis of only having ownership. You're still the owner of that jewelry because it's there somewhere. You just don't know where is it. So you don't have possession over it. You cannot wear it and touch and feel it anymore because you don't know where is it. So in this scenario, because only one of the criteria are met, the jewelry that is misplaced and there's no idea of where it could be located would be exempt from zakah. But you have rule 2, which is deemed possession, where an individual doesn't have possession, but they know where it is stored and they can access it as and when they want to. So maybe the individual owner doesn't have maybe a safety box at home, So they store it with a daughter or a son, and they have the passcode or the keys to the safe. In that scenario, the individual would have to be paying zakat on that jewelry. So it's misplaced in a way, but it's actually, they know where it's not truly misplaced in the true sense of the word, because they have ownership over the jewelry as well as possession. They can access the jewelry as and when they want to. So the result is, if jewelry is genuinely misplaced, we will only pay zakah for the current year after we've located the jewelry piece, and it is now on hand. Only for that current year in which zakah is being assessed or paid. Common question: can my husband or my son even pay zakah on my behalf? As far as the proxy's discharge of zakah is concerned, it's important to bear in mind that the short answer, the brief answer is yes, someone else can fulfill the obligation on your behalf. However, the duty still rests on the individual owner of that particular, those particular zakatable assets. So it's not like my husband or my son has paid my zakat on my behalf, so I'm done. It is important to make sure that the husband or the son, whoever is doing it on your, or even daughter, make sure that they understand the rules of zakah and are subjecting your wealth to zakah correctly. So the duty still rests on the individual. In this regard, from a Sharia perspective, we need consent for the other individual to pay zakah, whether it's the husband, son, daughter, any other relative. We need to give consent for the individual to pay zakah. Similarly, we can have deemed consent in place. Deemed consent means that, assuming we have the past 10 years of marriage, where the husband has, from the initial stages of the marriage, always paid zakat on behalf of his wife. In that scenario, it suffices as a form of consent based on the fact that there has been a historic practice of paying zakah on behalf of wife, or on behalf of the daughter for that matter. So in this scenario, it is classified as a form of deemed consent, and it meets the requirement of the Sharia for someone else to settle the zakah obligation. I must emphasize this, the zakah obligation still rests on the individual per se. Then question number 9 that we receive very frequently is it acceptable to pay zakah every month? Many Muslims are concerned about their future existence in this world, and hence they have this heightened sense of making up for their missed obligations of the past, whether it's their salah or zakah or even the other forms of Islamic obligations. So in keeping with this mindset, many individuals try to settle their zakah every month. They're keen to do it. So the question is it acceptable to do so, to pay your zakah before it's actually due? Once again, zakah is based on a balance sheet concept. It's based on whether you have the wealth which necessitates or obligates zakah. If an individual is already in possession of zakatable wealth, they are free to discharge the zakah or prepay the zakah before the zakah is actually due. There is permissibility purely because of this concept of zakah being based on the balance sheet concept. So whatever is owned and currently in possession can be subjected to zakah. However, there are two conditions for prepayment of zakah. The first condition is niyyah. An individual cannot just give away money and then when the time comes to pay zakah, say that all the money I paid in the past is my zakah, and so much has been paid, so there's only a balance of X amount, let me pay off the balance. So the niyyah is required before paying each installment of, or before prepaying each installment of zakah. The second condition is there still has to be an annual reconciliation. Remember, zakah is an annual concept, it's an annual obligation, hence the individual still has to do an annual reconciliation of how much was given away already, and from there determine if a sufficient amount has been given compared to what's actually due currently, well and good. If there's still a shortfall, then the shortfall needs to be made up for. If more has been given, well and good, the additional amounts would be regarded as nafil charity, and the individual will be rewarded for that. Question number 10, how do I identify a worthy recipient? Many women and Muslims want to discharge zakah personally and to their own family members or their own relatives and their neighbors maybe, or their friends who have now fallen on hard times. So this question also does arise frequently, and in terms of a response, what I'll provide is just the broad criteria from a Hanafi fiqh perspective, so that it can serve as a guideline. First of all, we need to look for surplus cash in the hands of the individual. We need to look for gold in large quantities, silver in large quantities, plus zakatable assets in the form of investments. Let's say they've invested in I don't know, some new product that's launched on the market. They've got stock in trade. You need to look at assets which are over and above basic necessity, like maybe very valuable luxury clothing or apparel on hand. That will need to be looked at. So we're looking at a cluster of these items. We're looking for cash, gold, silver, zakatable assets and investments, which can potentially be liquidated to fulfill their needs, stock in trade, assets above their basic necessity. Then we're looking at liabilities. If they have liabilities that are deductible from their assets, if the result is below the nisab, then that individual would be eligible to receive zakah. So we're just looking at broad categories of items that could potentially be in their possession, and we're doing a mental sum in terms of deducting liabilities below the nisab rate. The individual could potentially qualify as a valid recipient of zakah. What I must emphasize is that there is no need to pry into personal affairs or strip an individual of their dignity. What we just need to do is apply a bit of discretion in terms of determining the condition of an individual, and from there determine whether they qualify as a valid recipient or not. There is no need to disclose the status of the money when giving the zakah money. Sometimes we feel rather disgraced to say to someone that this is zakah money. Whereas from a Sharia perspective, there is no disgrace. It is permissible if the individual qualifies as a valid perspective as a donor. We are not obligated to disclose the status of the money when giving it over to a deserving recipient. So this is in a nutshell just the broad criteria that can be applied to determine whether someone qualifies or not. Obviously, it goes without saying, we need to just base our decision on lead an opulent lifestyle or a very lavish kind of style. We know the demeanor when they attend maybe public functions or events. They have a generally simplistic approach to things, or simple approach to things rather. Then it could be an indication that the individual qualifies as a valid recipient. Question number 11, can zakah be given to one's own husband or child who is in financial difficulty? This can be the case where you have the female spouse who is more well off and in a greater financial position, whereas the husband or maybe one of the children is now adult, but is fallen on hard times. And I'll try my best to respond to this particular question of giving zakah to a husband or child who's fallen on hard times. But to provide that response, I think let's just look at it holistically. The non-valid recipients, first of all, is a masjid. Then you have a non-Muslim who does not qualify for zakah, but can be given any other form of charity like lillah or nafil sadaqah, or even benefit from a waqf. A deceased estate, we cannot give zakah to a deceased estate. Someone has passed on and is owing money. There isn't enough funds for settling the creditors. Zakah cannot be given to a deceased estate for the heirs to settle their obligations. A spouse, here's our answer. From a Hanafi fiqh perspective, a person cannot give, a wife cannot give zakah to her own husband. And similarly, a wealthy person cannot qualify as a valid recipient of zakah. Zakah cannot be given to our ascendants, our parents, grandparents, and upwards. Similarly, zakah cannot be given to our descendants. And here's our other answer, that we cannot give zakah to our own children who have fallen on hard times. The rationale for this is that when giving zakah to one's own spouse or one's own children, it is akin to keeping it to oneself. Whereas the Sharia requires that zakah be given to an impoverished individual. There has to be ownership transfer from one natural person to another natural person. Whereas when giving zakah to a spouse or to a descendant, like a child or grandchild who has fallen on hard times, it is akin to keeping it to oneself. The criteria of transfer of ownership in the true sense of the word hasn't really transpired. And this is why it would not be permissible to give zakat to a spouse or even a descendant or ascendant for that matter. Someone who's a Sayyid cannot qualify as a valid recipient. These are relatives of Fatima radiallahu ta'ala anha, or any relative of the Banu Hashim, the relatives of Sayyidina Ali, Ja'far, Aqil, Abbas, Harith ibn Abdul Muttalib radiallahu ta'ala anhum ajma'in. These are the non-valid recipients, and the spouse and the descendant also fit within this broad category of non-valid recipients. Then the last question we have is, what if I only have gold in my possession? This tends to be the case where a person is not earning a regular income, but has got gold in large quantity or even small quantity, but only gold from all these zakatable assets is in their possession. In terms of a response, we need to understand this particular response of only having gold in one's possession within the context of the nisab rules itself. So in terms of nisab, the nisab weights are designated by the Sharia. From a hadith point of view, we've extracted from the hadith where Nabi sallallahu alayhi wasallam mentioned 20 gold dinars is the nisab rate for gold. That is equivalent to 87.48 grams in our time. In terms of silver, the 200 silver dirhams that Nabi sallallahu alayhi wasallam refers to in the hadith of Sahih Muslim and Sunan Abi Dawud is equivalent to 612.36 grams of silver. The rand equivalents as of the 11th of March 2022 in terms of gold is 82,701 rand and 84 cents. In terms of silver is 8,234 rand and 77 cents. Now coming to the question itself, where a person only possesses gold as a zakatable asset. In this scenario, if the individual only possesses gold, that gold would need to exceed 87.48 grams in order for zakat to be payable. If the individual is only holding gold and the gold is below 87.48 grams of gold, then zakat would not be payable. Even though the quantity of gold is quite significant, let's say it's 60 or 70 grams of gold, it's only gold, and it's quite sizable in terms of monetary value. But in the scenario where an individual only holds one particular zakatable asset like gold in their possession, then the gold would need to exceed 87.48 grams of gold in order for zakat to be payable. The same goes for silver. If an individual only has silver in their possession, no other zakatable asset, no stock in trade, no gold, no cash on hand, in this case, they would need to be possessing more than 612.36 grams of silver in order to be paying zakah. The third scenario is where an individual, and this is probably the most common scenario, where an individual has some portion of gold, they've got maybe 30 grams of silver, some cash, some investments. In this scenario, this is where we apply the rules in terms of clustering the value of the assets. And if the value of the assets exceeds the nisab of 8,234 rand, this is when zakah is now payable. It's an independent discussion, apart from the scope of this particular question, whether the individual should be using gold as nisab or silver as nisab. As things currently stand, research is emerging, but suffice to say that we are currently using the silver nisab of 8,234 rand to determine the zakah obligation of an individual in the scenario where an individual is holding small reserves of different asset classes for zakah purposes. In this scenario, we would value all the assets and subject them to zakah. We've reached the end of our presentation. Once again, this is our contact details. The telephone number is 011-373-8000, and the email address is ifta@jamiatsa.org for any questions.